What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Monday, April 1st. Alright guys, Palantir stock on Thursday finished the day down $1.50 per share. That's minus 6.12% in regular trading hours. It's essentially flat, down about another 3 cents after hours. As always, take after hours with a grain of salt. Volume is incredibly low. Easy to bully stocks. But let's get started here and try to pull out as much bias as we possibly can, utilizing things like the volume profile, the psychological levels, the options bias, right? The expected move, as well as areas that I expect we're going to see a lot of trading activity. So let's get started here with our daily ritual, the volume profile analysis here on the 5-minute chart. By the way, listen, if you have not done so already, please subscribe to the channel. I greatly appreciate it. Now let's take a look. First of all, the moves that initially catch my eye, or immediately I should say, that drop, small recovery, and fade off the open. And honestly, guys, the rest of the day was pretty tame. Kind of a slow fade into those intraday lows and then some consolidation into the close. So let's just focus on what I would deem as necessary to take a look at. This move that we got off the open, and see if there is any bias to be had hiding when we peel back a layer of the onion in the volume profile. And by the way, this does not have to correlate with the price action, right? That's why we're looking. It's another layer of data that helps us better understand the move, something that we cannot see simply by looking at the price action. All right, so we see here. Now, first of all, we expect, again, that high volume off the open and then a fade off the open as we head into more average intraday volume. And we actually got that. It was rather contextual throughout that move. However, we did see elevated volume on kind of like one, arguably two, maybe like 1.5 volume bars here that happen to be red. If we look at the actual candles that those correlated with, which is here and here, we had wicks on bottom, okay? Whereas, you know, that was kind of as we came into this shorter term bottom, and then we consolidated sideways for close to probably 45 minutes. So these two candles, if we really consider what's going on there, it's kind of like we're seeing this move to the downside slow and kind of pump the brakes. We start seeing those wicks form, and that's where we start to see these higher volume candles come in. And I personally believe that these are battle candles. They're not, you know, it's not like we're seeing 4 consecutive high volume bars that are higher than what would be expected for that particular time of day. We're seeing one and then a little bit on the tail end of the next move. But the positioning of those candles is leading me to believe that we're seeing battling going on. What I mean by that is buying and selling volume coming together and pumping up the volume of that bar, right? So the bias, quote unquote, is relatively explainable. Again, not to mention we're only seeing one bar, and with that to begin with, there's already a risk of that fooled by randomness. So, you know, bears, as we head into this coming week, coming off of a minus 6% day, I think you guys would be looking for as much bearish bias as we can get on a variety of fronts. Here in the volume profile, that there's really not a lot to be had. Bulls, you know, I suppose that would be good news if you're a bull, because on a minus 6% day, the assumption would be that we're seeing a lot of bearish bias in the volume profile. We're really not from Thursday. So let's move on here and take a look at the self-fulfilling prophecy psychological levels that I'm going to be paying close attention to come Monday, starting here with the 30-minute chart with those indicators that have the most eyeballs. All I have here is the 50 period and the 200 period. That's all we need. Now listen, we currently find ourselves almost 4% away from that nearest level, 3.9% away from that 50 period moving average. So listen, here's what I'm looking at. If you're a bear, your best case scenario is to see that 50 period on the 30 minutes start to really curl down aggressively. Bulls, you would not want to see this, okay? It curls down aggressively, whereas the stock stays sideways or continues downside, and the 50 period starts to close the gap between the stock price and itself. Bulls, really what I'm looking for here come Monday, ideally, you know, a reclaim of both of these would be beautiful, but just to start here, I would love to see that 50 period start to flatten out to give some upside potential for the stock to kind of rebound without having too many psychological barriers in the way getting back up toward 23.75.24. Each of those indicators is going to, of course, be a psychological potential barrier, which is why the bears want that as downside as possible to make the return back upside a little bit more of a psychological struggle. Okay, let's move on to the 4-hour chart and take a look here. You can see that, man, on Thursday, we gave that up. You know, we saw that break to the downside on the 50 period in pre-market. We broke downside through the 200 period here on the 4-hour chart, and those two are now coming together, and we currently find ourselves now, I mean, approximately, it's getting up there, approximately 3.6% away just from that 200 period now on the 4-hour chart, which puts us in a similar position as far as distance on the 4-hour as we saw on the 30 minutes. So, you know, listen, bulls, the main focus on the 30 minute and the 4-hour, aside from what we've already discussed, is just, of course, getting back upside to reclaim those, not just for the sake of getting back upside. Of course, that is obvious, but reclaiming those levels opens up a much more clear sky setup to push even higher, which I know if you're a bull, your goal is not $24 a share. It's a little bit further than that. But baby steps, right? A really great scenario for Monday here would be a reclaim of all four of those. The 2 on the 4-hour and the 2 on the 30 minute. Just understand, in order to do that, you're talking about maybe a 6% move. But let's talk about the biggest story here, which is going to be on the daily chart. Now, if we look here on the daily, guys, here on Palantir, it's really, really obvious. We have a couple of things going on. On Thursday, we came down and that $23 area, which is a level that we've had drawn, a technical level we've had drawn for quite a long time here on Palantir. It has recently turned a lot more into a psychological level as well, which tends to happen, right? Technical levels turn into psychological levels turn into technical levels. Not only that now, though, the 50-day moving average is at 2337-ish. Bulls, you know, two things here. Number one, we want to see a high volume hold of 23. Just a hard high volume bounce pull away from that level to the upside. Just hold this channel from 23 to 25, 25.50. Okay. In addition to that, bulls, that 50-day moving average moving upside to add in support, kind of like backup, right? That would be a beautiful thing to see. However, you know, it's moving upside at a reasonable rate. That might take, you know, at least a few days here, but the quicker that thing can get upside toward 23, the better. That 50-day, for those of you who may just be listening, is currently sitting at about 22.40. Bears, listen, bulls, this is what you guys would not really want to see. Bears, a downside break of not only 23, you know, but also really that 50-day moving average. That's about a 2.8% downside move to break through 23 and hit the 50-day. Okay? A downside break of both of those would be a beautiful thing if you're a bear. That knocks out 2 psychological levels that are in your way if you're a bear in a single day. But as a start, bears, a downside crack of 23 on high volume, a low volume retest, and boom, a high volume pull away heading down back toward that 50-day. That would be a reclaim of 23 as a resistance level, at least in the short term here on the daily. All right, and that sets you guys up for a test of the 50-day. But again, a reclaim of both of those as resistance would be best case scenario if you're a bear. Bulls, don't want to see that. Now let's take a look at the expected move here. The next expiration on Palantir, that's April 5th. Now, that's this coming Friday, okay? The expected move by then is plus or minus 1.24. Remember, the expected move is a volatility expectation that's actually priced in by market participants, okay? The directional bias then comes in from the analysis that we do, and then the options bias, which we'll look at in just a second here. But about $1.25 plus or minus per share by close on Friday, that tells us that, you know, since we have really no earnings or anything coming up this coming week, if we just divide that by each day of the week, the options market is expecting about $0.25 per share plus or minus per day. That's assuming, like, you know, 5 green days in a row or 5 red days in a row. The more likely scenario is we end up having a mix of red and green days, right? And that makes each day's volatility a little higher. All right, maybe you add 50% to that. But you have to understand why that's so important, right? Because if you have a directional bias, and especially if you're trading options, if you don't have a bias in terms of volatility expectation, you're only halfway there, right? Because you can be directionally correct and still lose a bunch of money if you overestimated the volatility with IV crush, just falling victim to theta decay, right? There has to be both. Do not overlook this. So we do the analysis, you start forming your directional bias, you start looking at the expected volatility, you start developing a bias. Okay, do I think Palantir's volatility is going to exceed, right, or fall short of what the market expects? Then you can most effectively look to position. Now, last thing here, what's the directional bias out of the chain? If we take a look, this is all from Thursday. 529,000 total contracts traded on Thursday. 342,000 of those were calls. 187,000 of those were puts. And look at this, since this video is primarily geared toward Monday, we have to look at the short-term bets, the 0 to 20 delta range, right? Those are those furthest out of the money contracts with, on average, the shortest expiration. Okay, so these are by far the most aggressive bets on average being placed by market participants. So take a look at that. The short-term speculators, 103,000 calls on Thursday, 54,000 puts, nearly double the call side bias in the short term compared to the put side bias. Now understand, as of late, in the last few months, this is especially normal, I should say, on Palantir. We have been seeing heavy call side bias on this name for weeks and weeks, if not months and months. But that's continuing here on Thursday. Listen, if your goal is to expedite, going perhaps part-time, maybe even full-time as a trader, I'm sure you'll find a lot of value in the Roensch Capital Gold server. I'm in there every single trading day, sending out my personal scalp setup alerts, my swing trade setup alerts as they come along, in-play stock alerts. Those are stocks that are demanding the attention of active traders and scalpers at that very moment. Unusual options activity, that's how I've been tracking that for years. That's how I track what the whales are doing, as well as, of course, working with my Platinum one-on-one group every single day. That link in the pinned comment, that'll allow you to get grandfathered in at the current rate. I appreciate it, and I'll see you in the next one.